A client of mine has been watching this market since October. Patient guy sitting on the sideline and waiting for the clarity. And when the May numbers drop, he called me and he's like, Houtan, our prices are going up. Is this over? Did I miss this whole boat? And I gave him the honest answer, which is no. You haven't missed anything, but the conditions that allow you to wait comfortably are quietly changing underneath you. And if you don't understand why, you're going to mistake a window that's slowly closing for one that's permanently open. I'm Houtan Moravej. Let me walk you through what the May 2026 TRREB data actually is telling us, because there are two very different stories in this report and you need to understand both of them. Quick context, if you haven't been following along, we started 2026 in a rough shape. February sales were down 6.3% year over year. Prices down over 7%. Homes were sitting for 36 days on average and buyers were frozen. March turned a bit more positive and April came in strong, plus 7% year over year on sales. And now in month of May, the direction of travel has been consistent for 4 months. More buyers coming into the market, fewer sellers listing, and the gap between those two lines are getting wider every month. That gap is exactly what we need to talk about today. May 2026, 6,583 homes sales across in GTA, up 6.3% compared to May last year, and second straight month of meaningful year-over-year sales growth after most of late 2025 and early 2026 spent in negative territory. Buyers are slowly showing up. Now here's the number that stopped me when I read the report. New listings, 17,698 came to market in May. Sounds good, right? Until you compare it to May 2025, when 21,830 listings came to the market. That's a drop of 18.9% year over year. Nearly 4,200 fewer homes available compared to this time last year. Biggest supply drop of the entire year. And total active listings, everything is available to buy right now, is down about 13.3% from a year ago. So you've got sales going up, supplies coming down at the same time. That's a textbook definition of market tightening. It's a structural shift in the supply-demand balance that has been building consistently since the start of the year. More buyers chasing fewer homes. That's the equation that eventually moves prices upward. We're in it right now. Homes are also selling faster. 27 days on the market in May, down from 36 days back in February. Buyers are making decisions more quickly because they're seeing the value and they're starting to feel the competition. Now here's the other half of the story, and this is just as important because tightening does not mean recovered. I want to be really clear about that. Look at this. The sales to new listing ratios, the pulse of the market balance, is sitting at 35.7% in May. Anything below 40% is a buyer's market. Anything above 60% is a seller's market. At 35.7%, buyers still have the upper hand. You're not in a bidding war market yet. Months of inventory at 4.8. We're inside the balance range of 4 to 6 months, but on the higher end of it. And prices, average selling price in May is $1,069,700, still down 4.6% from May 2025. The MLS Home Price Index Composite, the more precise measure, is down 6.7% year over year. In virtually every market segment and every region of the GTA, prices are still below where they were this time last year. Sales to listing ratio are sitting at 98%. Buyers are still successfully negotiating below asking. So here's the honest picture. The market is tightening, and this is the real, and it is consistent, but we're not in full recovery yet. Prices are still down year over year across the board. Inventory is elevated enough that buyers still have choices and real negotiating power. The sales to the new listing ratio at 35.7% puts you firmly in buyer's market territory in the most areas. This is a market in transition, not a market that has turned. Now let's go through this by property type, because the tightening is not happening equally everywhere, and where you're buying or selling changes everything about your position right now. Detached is the tightest segment in this entire market. 3,236 sold in May, up 9% year over year. Strongest sales growth of any product type. Average price at 1,358,131, still down 4.7% year over year across GTA. But break it down by region and something important shows up. In the 2905 suburbs, detached prices are only down 3.9% from last year. In the 416, it's down 6.5%, and the suburbs are tightening faster on detached than the city is. If you've been waiting to buy freehold detached homes in the 905, the negotiating window is narrow. It's at the narrowest, and it's been all year, and it's gonna be narrowing down further. Semi-detached tells the most interesting price story in this entire report. Sales basically flat year over year, down less than 1%, but price performance is the best of any segment GTA-wide. Semi-detached prices are down only 2.9%, and in the city of Toronto, the 416 specifically, semi-detached prices are down just 0.6%. That's essentially flat. That's a demand signal. The sub-million freehold play in Toronto proper is holding it much better than anything else in this market. Townhouse has a split personality, and you need to pay attention to this as well. GTA-wide townhouse sales are up 4.8% year over year. Sounds straightforward, right? But the 416 and the 905 are telling completely different stories underneath that number. City of Toronto townhouse sales are actually down 17.5% year over year. The 905 suburb up 12.3%. Two very different markets wearing the same label. On price, townhouses are the hardest hit freehold segment, down 7.1% year over year GTA-wide. If you're buying a townhouse, you have more negotiating room here than anywhere else in the freehold market. If you own a townhome in the 416 right now, your pricing is under more pressure than the headline numbers suggest, and you need to know that before you list your property. Okay, let's talk about condos. Still the segment with the most challenges and the most buyers leverage. 1,535 sold in May, up 4.2% year over year. Buyers are returning, but prices are still down 6.4% GTA-wide. And in the 905 suburbs specifically, condo prices are down 9.5% from last year. That's the weakest price performance of any segment anywhere in this report. The investor supply overhang hasn't cleared yet. If you're a buyer considering a condo, specifically a 905 condo, you have the most negotiating power of anyone in this market right now. If you own one and are thinking about selling, you need to price based on where the market actually is, not where you bought. So let me give you my straight take. If you're a buyer, here's where you actually stand. You're still in a window. Prices are still below last year across the board. The sales to new listings ratio says we're in a buyer's market. The sales to list ratio says you can still negotiate, and that's all true. But also true, the supply giving you that leverage is disappearing faster at any point this year compared to the number of sales. Nearly 4,200 fewer homes came to market in May compared to last year. Every month sellers stay on the sideline, your choices narrow. Every month sales continue to outpace listing, the balance of power shifts a little further towards the sellers. The buyers who will look back on 2026 as the year they made a smart move are the ones who recognize the tightening while they still had power. Not after the sales to new listing crosses 40, not after month of inventory drops below 4, right now. If you're a seller, the market is moving in your direction, but it hasn't fully arrived yet. The 98% sales to list ratio tells you buyers are informed and they know the data. Homes priced at markets are moving in under 30 days. Homes priced above market are sitting for 50, 60 days and doing price reduction. You cannot price to where you think this market is going. You have to price to where it actually is right now. One thing before I wrap up, TRREB's language in the May release shifted in a way worth noting. They said directly, competition between buyers has likely increased in some neighborhoods. This should see the price trend flatten and ultimately trend upward in the months ahead. That's TRREB calling for price growth. They don't say that lightly. So here's where we are in plain English. Market is tightening, supply shrinking at the fastest rate of 2026, sales growing, homes selling faster, but we're not in full recovery. Prices still below last year, sales to new listings still in buyer's market territory, negotiation power still exists. This is a market in transition, and the distance between transition and recovery is getting shorter every month. If you want to figure out what actually means for your specific situation, whether you're buying, selling, or trying to figure out the timing, that's what the link below is for. 30 minutes, free, no pitch, just your actual numbers. Link in the description. Text or call me directly at 416-456-1216, or you can email me at houtan@bigcityrealty.ca. Until next time.